Hello, this is Brian Resney, president of Resney Wealth Management. I want to talk a little bit about market timing, short-term market timing, because we've had a slew of questions on this in the last month or so, mostly from our radio and TV show listeners. Short-term market timing does not work. I have yet to see somebody who can time the market on a 2% pullback and then actually get back in a proper time frame, or in a 2% pullback that becomes a 10% pullback. We never know what's going to happen on the short term. But if I look at the next 3 to 5 years, which if you're a real investor, you're looking at the next 3 to 5 years, what happens this week or this month or this quarter is insignificant to what should happen to your portfolio. But I will tell you, there's a lot of investors who think you can jump in and out based upon rotation of small short-term trends. Very, very difficult unless you are a very astute, expert short-term trader. And I will tell you, I've seen almost none of those in my 30-year plus investing career. One of the other things that have come up on the question site is again about stocks like Apple. Investors, you do a horrible job investing your own money. You chase what's hot from last year and you sell what was down last year to add more to what was the best, which is almost the worst thing to do statistically. Overloaded the boat on Apple. I've seen so many TV and radio show listeners with questions about Apple. Should I buy Apple? That was, of course, at the beginning of 2018 because it had a great year the year before, only to be decimated by 40% by the end, essentially, of 2018. Investors chase what's hot, not what's of value and what can trend. Now, as Apple goes, and with a lot of other areas of the market, how investors unfortunately invest their money wrongly, Apple's another one of those. Again, the questions. Do you think Apple's a buy now because it's down? I think Apple's a good company, but I think its heyday is probably over. Everything runs in cycles, but investors chase what they hear about, not what they've researched or understand the trends are and the earnings growth potential. Smartphones are oversaturated, and Apple sells the most expensive smartphones in the market, and they've already captured the market they can. Now they're trying to move in other markets, let's say like the emerging markets. People in the emerging markets can't afford a $1,500 smartphone, guys. Remember that. So what's happening is they're losing market share now, and they're not the second big leader. They've actually dropped into like the third or fourth place and probably will drop more to other smartphone makers that are making $200 and $300 phones. Just because you like Apple or your Apple phone, and just because it did good 1 year of return, doesn't mean that's going to continue. In fact, I wouldn't be shocked if Apple has subpar returns or even potentially more losses over the next 3 to 5 years. And again, make sure you do your research before you buy an investment. If you're not managing your money properly, it's time you became a client of Resney Wealth Management. Real advice, real money management, none of the shenanigans or conflicts of Wall Street, brokerage firms, banks, and insurance people. That's the difference we provide. If you have a $500,000 portfolio and greater, call our firm for a consultation and realize and experience the difference we provide. Have a safe and profitable day.